Hello, everybody. This is Elihu.
And this is Peter.
And you're listening to Pineapple Chunks. Last week was pretty uneventful, so we were able to get at least some stories for you guys. One of those stories is are organ supplements the next collagen? And the second story is who would win in a fight, Jeff Bezos or Elon Musk? Actually, do you want to talk about Wall Street bets?
No, let's talk about Wall Street bets.
Let's talk about Wall Street bets.
I'm sick and tired of these fat cats in Wall Street dictating the terms of when we can and can't buy. And so is Elon Musk.
So Elon Musk has made a huge presence in all of this, from Doge to Bitcoin to Gamestonks to Clubhouse. And he even called out Vladimir, the founder or the CEO of Robinhood.
We have a little clip here when it started.
The stock impaler.
So this is Elon Musk
Hey guys, thanks for
and Vlad on Clubhouse.
It's good to hang with all of you.
All right, Vlad. What really happened? Give us the inside scoop.
Spill the beans.
All right. Well, I was actually hoping that you would invite me up for the Fermi paradox part because.
So anyway, they had the conversation. We're not gonna play the whole thing, but still, like in a gist, this guy Vlad, he went on the news, and everybody saw it. Everybody who was trading these stocks, AMC, GameStop, you saw it. He basically did some PR crap. He didn't explain the situation well enough. He didn't have a discussion about, or honest discussion, opening up the fact that they had a fundamental problem with funding their admission to trade with this clearinghouse, which ultimately stopped their ability to pay for the ability to trade these stocks.
Yeah, it was very reasonable. The reason it all happened, why the halting happened, it's all very reasonable. It's a liquidity issue. They were a startup. They didn't have that liquidity. But the way they executed
not a
it,
liquidity issue. That's the problem. That he was like, it's not a liquidity issue, but they had to take a credit line to basically.
It's totally a liquidity issue.
Yeah, right. That he just didn't.
It's 100% a liquidity. But they didn't say anything when it happened. They waited till Sunday, or not even Sunday. I don't even know when they actually said it. But they gave it like 2 or 3 days, and everybody was just upset and confused. And I mean, that's terrible PR. That's not how you handle a situation like that. Ooh. You cut off buying to millions of retail investors. They're gonna get pissed, man. You gotta explain what you did and why you did it.
Maybe we should give a little bit of background of what we're talking about for anybody who's listening and doesn't know we're mentioning. So Wall Street Bets, the famous Reddit page, got together hundreds of thousands of investors to purchase stocks in GameStop,
also known as the meme stocks. Well, GameStop was one of them, but yeah,
that's definitely the leading one. That's, I think, where the majority of the money is going. Mm-hmm. But yes, AMC, Nokia, all these other ones, BlackBerry, they're getting some attention. They're also raising in prices. But the whole reason that people are buying GameStop all of a sudden is because of deep effing value. This guy realized a couple years ago that hedge funds were shorting the company 130% of its value. So, and if for those of you who don't know what that means, shorting a company means they're betting that the company is going to go down. And you're basically 130% shorting a company, which is like, how can you eat 130% of a pie? There's only like 100% of a pie.
And if you guys haven't noticed by Peter's whacking of a magazine, he's really upset. And so am I, because it's kind of messed up.
It costs us money.
It costs us money. I mean,
it was so screwed.
It costs us money, and it's also kind of it's screwed how these hedge fund managers can just decide, because they have so much power with all the money that they have to play with. They can just decide to make a company go to shit, and they shouldn't be allowed to have that power. And if they are going to have that power, then there should be an alternative force in the stock market, a yin and a yang, to counteract that. But once that appeared with the help of this subreddit, we get shut down. I mean, dude.
Yeah, so basically this guy, he was like leading the movement in a sense, buying up call options, buying up stocks, and countering the hedge fund's massive short position. And basically when you're betting a stock is going to go down, ideally, you think that people aren't going to buy the stock because they don't see any value in the company's prospects for making a profit. So ultimately, this guy goes on Wall Street Bets and gathers an army, shows his position, shows his conviction, and ultimately starts actually putting up a fight with him and his money, and then all the Reddit community of Wall Street Bets to counteract this short position. And ultimately, if what happens is that if you're betting for a company to go down and suddenly the stock shoots up like tremendously, like from $40 to $400,
all those short sellers are going to have to sell or buy back the stocks
at a higher price because they're wrong. They lose. They're basically losing money. And maybe we could go into it, but it's a little complicated to explain.
Yeah, I mean, this is essentially what you guys have been hearing on the media. It's a short squeeze. That's what we've been trying to artificially create. And a short squeeze occurs when a stock or other asset jumps sharply higher, forcing traders who had bet that its price would fall to buy it in order to forestall even greater losses. Their scramble to buy only adds to the upward pressure on the stock's price. Right now, the squeeze has not been squashed for GameStop, but that is the goal. That is the end goal. And Deep Effing Value, you guys can think of him as the cult leader. If Wall Street Bets was a cult, which, I mean, it essentially is. It is a cult full of a lot of meme enthusiasts. And Deep Effing Value is the rowing kitty on YouTube. He is the cult leader. He's got over he's made millions so far.
He's made like 30. I think at the peak he was at like 50 million.
Because he's been in since the very beginning. GameStop's.
He's talking. Here's a thing he says: "Hello, soldiers, autists, and retards and females." Not my words, his words. I've noticed that too many. Okay, I'm not gonna say that. Asking why is GME dropping and when should I sell? To clarify your paper-handed shit's concern, the squeeze is yet to come. It hasn't begun yet. And so he's leading this movement, and it's not really him who's manipulating the market, but he's definitely like encouraging people to understand that, you know, the war isn't over and that the short squeeze isn't, it's only the beginning.
Well, he's not manipulating the market either.
Well, he's not doing anything out of the ordinary because for example, a lot of people bring up Bill Ackman, and Bill Ackman is a famous activist investor. I'll pull up a picture of him. And he basically shorted the market right before the virus, the big pandemic that occurred. And this guy, he basically was betting the stock market was going to dip. He put a bunch of money saying that I bet the stock market is going to go dip. So he shorted it. And what that ultimately is, I was bringing it up again, what shorting is like, and I have a video on this. You can go check it out on my channel. But basically, he borrowed shares from other people, like actual stocks, and then he sold them immediately on the market for a high price because the market hadn't dipped. And then he went on live TV and he started saying everybody needs to shut down. He started scaring people, used his media attention and his influence to basically get more people freaked out about closing down and shutting things down, saying that there's not gonna be any hotels open anymore. There's not gonna be any ability for people to go out at all because of this virus. And ultimately, he made a ton of money when the market dipped really hard and you know the shit hit the fan. And that's it's kind of similar. It's very similar because he was going on live media TV, like actual broadcasted television, which is, you know, syndicated through YouTube. But this guy's just using a chat forum and he's doing the same thing. But in this case, it's like for a different reason. You know, one is Bill Ackman is like, you know, he's like scared. He's like saying he's super worried. And then he's also, you know, profiting off of the fear mongering. But this guy, Deep Effing Value, is saying these hedge funds can't short a company for more than what it's actually worth. Like there isn't 130% of anything. There's only 100%. And that's gambling. That's beyond gambling. That's irresponsible. So his movement is saying these guys have been getting away with this type of behavior since the 2008 financial crisis, and they're doing it again, being irresponsible, and this can ultimately drop the market. And so we basically have to combat this and show them a lesson, make them go bankrupt. And the Reddit community and really through him have put more than $2.8 billion in losses from the main short seller Melvin Capital. If you haven't heard of them.
They've made a lot of history, and it's power like this, like Ackman and Deep Effing Value, that that recognition, that clout, that makes them market makers in a sense. They just create so much influence in the market and power that they are essentially manipulating the market in a non-direct way. I mean, Elon Musk, I think, also does that. Elon Musk is actually more direct because everything he tweets just turns to gold. I mean, he tweeted in January 26 Gamestonk with the link Wall Street Bets subreddit on there, and the stock skyrocketed, right? He tweeted about Doge, and Doge went from like 1.001 or something to 8 cents. That's a crazy return of your investment. But it's
Bitcoin too. He did the Bitcoin one.
Right? He added Bitcoin to his Twitter biography.
That was an interesting one. Let me pull that chart up because it was very short lived, and it shows how fragile the Bitcoin market is right now. Because if it shoots up just because of a guy's tweet, like in a day, let's see when that peak, that huge come up. It was on Friday. So right here, look at it. So he tweets it on Friday. It was at 32. Then it shoots up all the way to freaking $38,000.
That's so much money.
Like, that's huge. That was on Friday. $38,000, and then it drops back to its consistent 33. But it shows how basically fragile this market is, especially Bitcoin. It hasn't been matured as much, and in a sense, I think Elon Musk is incentivized to play this game, and this bubble game, in a sense, because GameStop is not going to be able to be at $400, or when it gets to $1,000, not going to be able to maintain that valuation.
No way, it's not gonna be
for long term. Bitcoin, maybe I do believe in Bitcoin, but at the same time, I don't necessarily have a lot of faith in maintaining a certain value, like a value like this, for too long. It could go to 100,000, but it can't stay at 100,000 forever. So maybe I'm wrong, but I think Elon Musk, and this is also in the words of Peter Schiff, Elon Musk is kind of incentivized to play the game of increasing or expanding the size of the bubble or inflating the bubble, because in a sense Tesla is kind of like in that realm. Like if he kind of tries to deflate or pop the bubble, then he ultimately gets affected by that negatively too, because if you pop the bubble for Bitcoin, you pop the bubble for GameStop, you pop the bubble for Dogecoin, then you also in effect pop the bubble for the stock market, and the stock market affects Tesla's share price, which is also increased exponentially.
So why does he do it then?
Because you play the game. No, because you play the game until the music stops. I mean, it is at the end of the day like musical chairs. I mean, we've seen it before.
It's still doing phenomenal. Tesla.
Oh, Tesla's doing great. I mean, I love the company. I think the bubble still hasn't. It's still inflating. But if you look at something like the .com bubble, which happened in March 2000, 2001, I think it was when it popped. Look at this graph. So pretty much, this is, what is it? Oh, this is the NASDAQ. So this is all the tech stocks that were huge. So the .com bubble, for those of you who don't know, is when the internet was first starting off. You just heard what .com is. So anything with a .com, people were throwing...
.nets.
No
.ios.
Well, it was mainly
.com.
.cos.
It's .com.
So seriously, people were throwing money at anything with the ending of .com. Like hundreds of thousands of dollars. And you can see the NASDAQ got to a peak of 5,000. And when it got to that peak, it just dropped. And it hasn't got up to this $5,000 peak since. Actually, I might be wrong. Let's see the NASDAQ since 2000. NASDAQ composite. So we'll look at it from 2001. 86, 2001, March.
And so all this volume that's coming into the markets right now is overwhelming.
My mistake.
To start up like brokerages like Robinhood and Webull. And so they come into this liquidity issue, right? Because there's so much market. I mean, you were telling me earlier today how a lot of we just reached like record highs in the amount of retail money this year.
Oh yeah, let me pull up that graph. So 36% of the U.S. equities are owned by households. So people like us, like retail investors, or the poors, in a sense, and then 3% is only owned by hedge funds.
which is not much.
And then the rest is owned by the top 1%. So, and out of I believe there's like 500 trillion. Let me see what the number is of the total U.S. equity market value.
And so we're seeing records in the amount of trades, the amount of shares being traded that we've never seen before, ever. This month has been crazy in terms of records broken for volume, all because influential individuals like Elon Musk and Ackman and DFing Value, they just have the power to influence people to just all put their money into one bag. And so we can talk about Robinhood's issue now, because now we understand that backstory. Robinhood had too much volume going on, and
sorry, just before you start, it's $57 trillion is the value of the total U.S. equity market. Just to say, so the households own 36%. Just want to say that.
And so I'm just gonna go ahead and talk about
the Robinhood
thing. So the DTC, the Depository Trust and Clearing Corporation, they service intermediary for all your trades. Trades settle in 2 days, right? So if you buy today, you actually don't get your money until Friday. Maybe Robinhood gives you your money immediately because of immediate trading.
They front you the money.
Yeah, exactly. But they are taking a risk by doing that. The DTC's role is to guarantee that these trades fully execute, right? So that if you buy a share, you get your share, and if you sell it, you get your money. Whenever you do a trade, though, the DTC requires from the clearinghouse, or the brokers go through the clearinghouse, like Robinhood goes through a clearinghouse. Fidelity, I think, has their own clearinghouse. The clearinghouse has to then front about 2% of the trade's value.
Well, but real quick, just before you continue, Robinhood, because you mentioned TD Ameritrade, Fidelity, they have their own clearing houses. Like, they are a clearing house, so they can process these transactions themselves, so they don't have to pay any third party. Robinhood, because they're a tech startup,
they don't have that much capital to work with. They don't,
they just have a third party. They outsource that side of the business, so they handle all the techie swipe up, really
clearing house as a service, or CHOCH
as a service. It's a CAS.
It's a CAS. Yeah. So the clearinghouse has to front about 2% of the trade's value to the DTC. Let's say Apple costs $100 right now. That means so that when you buy a share, the clearinghouse has to send $2 to DTC. That's 2% of 100. That serves as collateral in case something bad happens. I don't know what that bad thing is.
It's sometimes Robinhood gives you instant deposit. Like I say, if I deposit $500, that takes 3 days to get to Robinhood. But Robinhood says, hey, here's an instant $500, so you can start trading now. And so, but sometimes that's why the collateral is there.
It's all credit.
It's all credit in the sense. That's why the collateral is there, because if, say, after those 3 days that I deposited that $500 and it doesn't go through, Robinhood holds the bag, and what they'll do is they'll sell your shares or whatever, and so that collateral within the clearinghouse is also security that doesn't happen, to Robinhood or to them.
Right. So with that in mind, what happened with the volume of GameStop being so high was that the DTC had to raise their collateral from 2% to nearly 100%. Right. If GameStop was trading at around $300 to $400. That means that the clearing firms had to send 100% of of those trades' values as collateral. So instead of 2%, which 2% of 400 is, I don't even know, a small amount, they have to send the whole amount. And there's a lot of shares of GameStop being bought. I mean, look at the price. There were a lot of shares of GameStop being bought. So a small brokerage like Robinhood or Webull or Public, they don't have that capital to just front to the DTC.
What happened at Clubhouse when Elon Musk and Vlad were talking, basically what he alluded to, which basically Elon Musk had to beat it out of him, but he was saying that it was just too high of a price to pay. It was like $3 billion or something, where they would have to pay in order for the clearinghouse to allow them to trade these stocks. So better than them paying that price because they didn't have it. They both basically said, hey, we're going to stop just letting you buy these stocks. They paused it. But you can only sell them.
So you can only sell them. People were upset about that. They were like, why can't we buy, but we can sell? Well, if you can't sell, that is way worse, right? If you see the price of your stocks going down and you can't do anything about it in regards to selling, then that's just that doesn't help anybody. So we would have probably been way more upset if that were the case. So I'm glad they at least let us sell. I'm not glad that they didn't disclose this information as soon as they blocked buying, because that would have, saved a lot of anger in the media. But nonetheless, that's what happened.
Vlad could have done a better job at opening the dialogue and talking to his customers instead of doing this BS ring around lawyer PR talk, because it really just made it seem as though he was beholden to these clearinghouses. And if Citadel, for example,
and then we had all these conspiracies coming up. Yeah, like Citadel, like telling them not to, let us buy. Because you could have avoided all of that.
But think about it, because Robinhood is free, right? So to us, to users who trade. So if Robinhood is free to us and they don't make money from our trades realistically, then we are the product.
Right.
So who are their customers? The hedge funds. The hedge funds are the Robinhood's customers, because they pay Robinhood in dollars and cents for that order flow to fulfill those orders. So if now these hedge funds are costing, this is just a conspiracy though, I'm not saying this is true, because honestly I'm not trying to be slanderous, but if, for example, now Robinhood and all the retail traders are costing Robinhood's main customers, the hedge funds who are paying for this order flow, or paying them for the order flow, if they're costing them money, then there could be, speculatively saying, that Citadel was like, hey, our boys over here at Citadel and Melvin Capital, because we just lent Melvin Capital a bunch of money so they don't go bankrupt, our boys are getting crushed, you need to stop the trading. So that in effect could also be like the clearinghouses raising that admission price to $3 billion to trade these stocks, which they knew Robinhood didn't have. On average, they probably have to pay $300 million in order to allow these trades. But Citadel and all these clearinghouses do pay them for that order flow. So if you kind of think about it like that, that is could be a conspiracy theory in a sense. But it just seems more like they just couldn't afford, because they aren't a clearinghouse, to transact these specific high-risk stocks.
Yeah, and listen, I get it. I get $3 billion waking up to that, that's a lot of money, and I understand they were able to work it. They called the NSCC and they were able to work it down to 1.4 billion. That was still a very high number. So in order to get it down to 700 million, which was the final amount that they had to put down for collateral, they had to block that entire day. I believe it was Thursday last week. They had to block that entire day from people buying these securities. And then they were able to raise $1 billion
from their credit lines, which is from the credit lines,
and then they resumed trading the securities, but very limited. So there was at one point you can only buy one share of AMC. Like, yo, get out of here, dude. That's nothing. Do I believe they could have done better? Absolutely. I think Robinhood is a very renowned company at this point. They're a pretty lucrative brokerage, and they shouldn't have had a problem finding investors in a short amount of time. I think they could have easily covered that $3 billion collateral to keep providing us, their users, with the shares. I mean, they did almost a social suicide, and it didn't have to come to that point.
Right. I mean, but also we've seen that the system, it wasn't built for pumps and dumps like this. It's like kind of crazy.
Yeah.
I mean, look at that growth. That is absurd. This isn't a month.
But also, this wasn't, this didn't happen all of a sudden. This was seen that it was going to happen. This was in development.
I mean, Robinhood has messed up a lot. I mean, remember the corona, like the whole virus thing? Like they could not trade on the most volatile day. Like people could not trade when the market was dipping.
And every morning, like your options aren't even up to date. You have to wait. It's like all glitchy. Your stocks are just fluctuating everywhere. One morning you can have like over 100 times your money, and the other morning you're like down 100 times your money, and then you're like, whoa, what's going on? And then it just comes back to normal.
Well, and also
stuff like that shouldn't be happening to brokerages.
And in effect, too, like, when Robinhood stopped the ability to purchase shares, that indirectly affected the stock price, because when people stop buying the shares, it doesn't allow the price to go up, because
and most retail investors nowadays are on Robinhood.
Right, the majority of them, right? So, and I mean, if it's 36% of households who own U.S. equities and only 3% of that total 57 trillion U.S. equities market is owned by hedge funds, then that has a pretty big impact. And so it actually furthers the conspiracy as far as like, yeah, maybe there was a backroom deal. They're probably gonna have to get a slap on the wrist because people are suing them. But still, at the end of the day, they're gonna get away with it. There's no proof. There's no actual evidence. And Meet Kevin has a fantastic explanation of this about like the lawsuits because he knows a lot about that. But you know, there's just no way for them to really like get in trouble, and no one's really gonna go to jail or anything like that. It's just, I would really like to see someone go to jail for this, but still, can't.
Yeah,
it's not gonna happen.
Yeah, unfortunately.